what's up, everybody, and welcome. This is the Swinging Bull, joined by Prime Patrick. And the big question we've heard a lot is, will the economy enter a worldwide recession? This kind of sparked up interest after FedEx, the CEO of FedEx, actually announced that he has fears of the economy going into a worldwide recession. FedEx actually lost over 20% today since yesterday. They're down 21%. If you're looking at my chart here, you can see this massive sell-off it had. And even if we compared this FedEx chart to SPY, SPY didn't sell off that hard, but FedEx did. And they had some weak guidance moving forward. And there are some concerns here about a worldwide recession. We got mortgage interest rates up to 6% now. We do have the 2-year yield rises to 3.9%, first time since 2007. European stocks are getting hammered. Asian stocks are getting hammered. Another interesting fact here, the British pound sunk to the lowest level against the dollar since 1985. So, things are not looking good over there. And couple that also, usually gold is a flight to safety, but gold has been extending their losses as well. Lots of things going against us right now as a whole. What do you think about all that, Patrick? Do you got any thoughts about that? And where?
Yeah, I mean, absolutely. I mean, this hasn't been or shouldn't be a surprise to anybody. I mean, there has been nonstop talk about a recession, possibly a global recession for months now. And in fact, as most traders know, Michael Burry, who was the main guy that called the 07-08 recession, he's been saying that this was coming for quite some time. Of course, there has been a lot of volatility with the Fed talks, with the rate hike next week, with quad witching hour today. So I'm sure that's playing into it. But I mean, it's not a surprise to anybody, but it's still ugly to see, I got to say.
Yeah, absolutely. No, I agree with that. And, there could be some dark times ahead. Of course, the way we trade is we play the downside as well. So, whether the stocks are going up or down, we always find ways to make money. That's what we do over here. But
in fact, I'm actually a bear at heart. So, I mean, I hate to see the market crumble because I know a lot of people are in a bullish position, but it's actually been really solid for the bears.
Yeah. And I mean, I still have quite a bit of positions in my retirement account. And what I'm doing is, I've been doing a lot of shorting lately and entering put options and stuff like that, and kind of using that as a hedge against my retirement account. So, we're making money on the downside to help our long positions. You did mention quadruple witching just a little bit ago. And what that refers to is a date in which derivatives of stock index futures, stock options, and stock index options and single stock futures all expiring at the same time. And, that's what happened today. And you can see from the SPY chart on my screen here.
Are you seeing SPY right now?
Yeah, I got the 1-minute chart pulled up. It is pumping up pretty good. We did have that gap down in pre-market this morning, looking like it wants to try and come up to the bottom of this gap here. It's about 2:50 p.m. Eastern. Got about another hour and 10 minutes of the regular session. So we'll definitely see what SPY does for the rest of the day. But it looks like it's making higher lows here and higher highs. So kind of stepping up a little bit, sitting at 384 now. But what a wild ride today by SPY because of the quadruple witching day. Had something to do with that. And just really choppy, pretty much a range day, even though we are down, we were down about 1%, kind of clawing back some of these losses here right now. But just a choppy day. We've been scalping all day, basically waiting for pumps and buying puts. And then, waiting for these little sell-offs and then getting in some call options just for some quick scalps that we've been doing all day. I did want to look at the bigger picture of SPY which is the ETF that tracks the S&P 500 index. And looking at the daily chart here, let me just draw some quick levels on here, and then wanted to get your opinion on this, Patrick. Just slap on a quick Fibonacci there. That's good enough. As you can see, yesterday and about a week or so ago, we were hitting this 61.8% fib level here, which I do think is an important level. The last time we hit this level before yesterday, we did bounce off and get a nice little bull run for about 4 days there. And then, of course, the other day earlier this week, we had that 2% gap down in pre-market, which ended up being, at the end of the day, the SPY lost 4.3% loss in one day.
Worst trading day, worst single trading day since 2020.
Yeah. There's a lot of stats being thrown around out there. Just some of these unbelievable numbers and levels that we're at, and the losses that we've been taking, and the number of years that have gone by since we've experienced something like this. And I did want to mention yesterday, we had a red day yesterday as well, and it was interesting because we settled right above the 61.8%. Now I'm pretty sure there were some people maybe anticipating a bounce today, because we were back at this 61.8% level on SPY. And a lot of people got caught with their pants down entering calls at the end of the day yesterday, because of course we were down again today, and we dropped below this 68.1% fib line. It was right around the 388 area. That was the level.
It carried right over from after hours into pre-market. I mean, we've had small pumps throughout the day, but I mean, it's pretty much been deep red for the last several. I mean, just
this whole week.
Yeah.
I mean, this whole week has just been a bearish week, and it was a nice bull run that we had about a week ago, last week. We had all these green daily candles pop out, and this week we just we lost all those gains from last week. But as far as levels to the downside on the bigger picture, now that we lost the 61.8% level, which was right around the 388 level, was the level I was watching to see if we could hold that, which of course we did not. So levels to the downside, I mean, now that we lost the 388 level, we're definitely could be looking at popping into the 370s again next week, if we don't get some buyers stepping in here. So I'm looking at 375 to the downside as the next level. If we can recover and reclaim the 388 again, 388 to 390, I would feel comfortable there. If we can reclaim that level, might get a push back up to the mid 390s, 395 area there. So those are my levels to the downside and the upside for next week. What were your opinions on that?
Yeah, no,
for next week? What do you think?
I would definitely agree that, in fact, I was looking at 382, and if we drop that, going down to like 375, 373 area.
Right.
But I would be cautious to any traders out there right now that are looking for buyers to step in today specifically, because again, we do have quad witching hour, which means the amount of contracts that are going to be changing hands, either closed out, expiring, or rolled, is going to be enormous.
Right.
And then we've got the Fed talk on Tuesday and Wednesday. So
yeah,
I'm curious to see what it looks like in after hours. But I think Monday is going to start setting the tone for us, at least leading, of course, into what Powell has to say.
Yeah, next week should be an interesting week for economic reports. Monday, we got the home builders index. We'll see where they stand there. And one of the important things for next week is going to be Wednesday, September 21st, at 2 p.m. We do have the Federal Reserve statement where they will disclose how much they're going to hike the interest rates. Personally, I think they're going to come in at 0.75. If they come in a whole 1% increase, it's been a while since that has happened. So I'm thinking 0.75, and then of course we got the news conference at 2:30 p.m. by Jerome Powell. So all eyes on this economic report next week for Wednesday. I think it's gonna, the outcome of that economic report for the interest rates, I think it's gonna have a big impact on the market, and that's gonna be decision-making time I think for the SPY chart here, whether we can pop back above this 388, 390-ish area, if we can pop back up into there, if the markets if they digest the information well from the interest rate hikes, if it's not digested well, like you were saying earlier, Patrick, probably gonna be dipping into the 370s again.
I mean, honestly, if it comes to us with the 0.75, I see us going on a bull run. But if it comes to the full 1%, I think honestly we blow past the 375 range, and we could see lows that we saw in June.
Yeah, maybe even make lower lows for the year. We'll see. Yeah, but
it'll be wild. I'll tell you, I usually like to do some kind of like lotto plays, but I think for this one, if I do anything at all, it'll be very light, and I'm gonna more sit on cash and play the reaction.
Yeah, I'm definitely going to be playing the reactions as well. Probably doing a lot of scalping and day trading next week. So we'll see what happens next week. All eyes on next Wednesday for the interest rate hike decision. Patrick, I appreciate you joining us. If you're watching on YouTube, please feel free to like and subscribe. And if you want to join our free Discord, check out the links in the description. I hope everyone has a great weekend, and we'll see you guys next week.
All right, guys. See ya.